Let's start with non-farm payrolls. Hiring. How was it impacted by February's severe winter weather?
Well, we're likely to see another substantial impact, and it will be another 2 months before we get a real good, clean look at the true underlying pace of hiring. Right now, the Bloomberg consensus forecast is looking for 150. I think we're probably looking closer to 120. And you can see we've had quite a bit of distortion over the last couple months, specifically in goods producing and services. I would not be surprised, due to the extreme weather we did see in February virtually all over the country except for the West Coast, that we're just going to see so many days lost to production that hiring is just not going to happen.
Joe, a lot of people are talking about the weather, but any structural deficiencies as well to deal with?
Well, two things. One is, if you're a policymaker and you're looking at this data, you are right. Just look right past it. Wait 2 or 3 months and you'll get a better sense of what's going on. Now, I'm one of these economists out in the market who think that we do have a structural problem in the labor market.
Okay.
Therefore, you want to continue looking at the duration of unemployment, the number of people who are working either A, part-time, or a share of the number of workers part-time, and then B, you want to look at people who have been unemployed 27 weeks or longer.
Personal income and spending's next. Have wages stabilized?
Yeah, wages have stabilized, albeit at a very low level. Now, if we look at this chart, and you can see the white line, the employment cost index, the orange line, civil worker wages, and average hourly earnings, what you're seeing is a stabilization below 2% for the average nominal increase in wages. Now, if you adjust that for inflation, it's much lower, and if you look at increases in personal disposable income, that's well below the 1.6 20-year average. This is why we continue to underperform in terms of overall growth and, of course, spending.
But civilian worker wages, we're seeing a little bit of uptick there towards
well, we picked up there at the end of the year. You tend to see bonuses, right? So you don't want to make too much of a big deal if you see an uptick at the end of the year. The problem is, if I went back to 1990 and showed you this chart, that's a long slide to where we are now, and that's troubling.
Joe, February manufacturing numbers are going to be out. Bloomberg consensus forecast an increase to 52.2 following January's 51.3 reading. I guess the question is about downside risk. Is it there?
Yeah, we got some pretty significant downside risk for 2 reasons. One is we've got a pretty substantial inventory overhang, specifically in the auto sector, which we'll talk about here in a second, which points to broader problems in the economy, specifically having to do again with the auto sector and less hours worked. And we are going to have some sort of weather impact in this ISM, given what we've seen everywhere else. You're looking at the spread between new orders, less inventories, which is an indicator of future production, and then ISM. The top line index, you saw them both turn over last month. A bit of an exaggerated number, but we're still leveling off from that big 6-month surge we saw during the final 6 months of 2013.
Joe, you just spoke briefly about autos. Total vehicle sales are going to be released next week. Again, weather is expected to play a factor there. But the weak wage environment is also a factor here. What's the Bloomberg consensus forecast?
Okay, so we're expecting a 15.4 million annualized pace of sales. Now, this is critical. At the end of January, we had 88 days of inventory on the market. What's sustainable is around 65. This is one of the places where we've got imbalances in inventories, and one of the reasons why we've seen that slowdown in production, and that's not because of the weather. That's got to do with an imbalance in supply. So we need to see the pace of sales pick up substantially. My sense here is that A, the weather's going to inhibit that. B, eventually the automakers are going to have to put in some pretty big incentives to clear those inventories off the lot, or this economy will slow a little bit more than people think.
And I would imagine we're a day before March. In April, will that number spike up a little? Will people start getting their tax returns back?
Yeah, that's what I'm expecting, that we're going to get a spring rebound. One, it'll be a little release of a little bit of pent-up demand, and two, a little bit more cash on hand. But remember, this is the year many middle-income Americans are going to see the caps on their interest they write off on their homes reduced. So they may get a little bit less. So I want to wait and see what some of that tax data looks like.
Joe, about 30 seconds left. Finally, non-manufacturing data. Richmond Fed survey. What's it likely to tell us about service sector activity?
Service sector remains flat. Retail is really taking it on the chin. Hiring is going to probably be stayed for at least another month.